when you see roadblocks, and surety bonds for most people are a roadblock or a headache or a problem, that's a great thing because what happens is many other people just walk away from that. They're like, I don't want to deal with that. That's a problem. I want something that's easier. I tell people this is the greatest thing in the world. Roadblocks are amazing because it drives competition away. It raises margins. Once you're able to get past that hurdle, you're in, I'm not going to call it a blue ocean, but there's a blue ocean with fewer ships for sure.
Yeah, it sounds like roadblocks are great because they can create that moat around whatever you're trying to accomplish. And once you get past that moat, then you can perhaps charge more and make more money and solve a bigger problem. Hello, everybody. Welcome to the Build to Billions podcast. We guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to have you scale and compound your wealth in life so you can give more all the way to help MVPs. My name is Brett Swartz. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets and insights with us so we can all level up and make a bigger impact. I'm excited about our next guest. He is an attorney turned entrepreneur who built a national surety bond brokerage in one of the most overlooked sectors of finance. As a founder and president of Axios Surety and Swiftbonds, he has helped process over $1 billion in bonds for more than 20,000 clients across the United States, transforming a niche financial instrument into a powerful growth lever for contractors and business owners, and so much more. Please welcome to the show with me, Mr. Gary Eastman. Gary, how are we doing?
Doing great. Thank you so much for having me on today. I really appreciate it.
Excellent. For our listeners getting to know you for the first time, would you give us a little more about your story and your current focus?
No, absolutely. So, just to give you a quick background, I am an attorney by trade. So, went to law school. Worked at the huge law firms. Was a general counsel of some public companies, and then ended up by accident starting the surety bond business. So, what happened was I started doing some estate planning for folks. Just trying to meet more people instead of doing these huge files. As I met with those people, you had some probate that happened, when people pass away. There's something called a probate bond out there. So I started, getting those. I said, well, why don't I just get them for myself? And then after I did that, I had a bunch of friends say, hey, get me these bonds as well. So I started expanding that. And then we said, hey, if we're doing this, we might as well actually turn it into a business, and started doing it, for like other contractors and things like this. And then suddenly, boom, 18 years later, I've got this business that I never planned on. Wasn't my focus in life. Surety bonds is nobody's focus in life, and turned it into something that actually that works. So we've been super, super lucky and blessed.
Hey, fantastic. And people want to learn more, you go to swiftbonds.com, swiftbonds.com. So when most people think about bonds, I think about like bailing your buddy out, right, who got in some trouble. But walk us through the basics of this, because I don't think everyone knows. And then second, what's kind of the investing side, I guess, of it, which is kind of interesting too.
Okay. Yeah, so let's start with the basics. So what a surety bond is a three-party contract. So between the obligor, the obligee, and the surety. Now, we don't do bail bonds, but that has a similar concept. Basically, we do it for mostly construction companies. So a company goes into, let's say to build a school. So the obligor is the contractor, the obligee is the school, and the surety is the person that guarantees that the contractor is going to get the done on time, pursuant to the terms of the contract, and then make sure that everybody gets paid, vendors, material vendors or subcontractors. That way, the school gets done on time, which is pretty important when you're building for schools, because they have a specific time frame, or roads, same thing, as well as making sure that there's no liens out there and those types of things. So that's the very basics of bonding. Now you know more than most people.
Excellent. So how do you make money in it as an investor?
Yeah, so for investors, where this really comes into play is using bonds as a tool for your projects, right? So a lot of investors, when they are doing some sort of real estate or construction or any sort of project, they have this massive tail risk, right? So, for example, we have a lot of people that go out and say, hey, I want to build this building to be able to rent it out and, start receiving returns, because I'm renting it out to, let's say, construction companies or lawn companies or, all these different ideas. The risk is if that thing doesn't get done on time, then they're missing out on months and months and months of opportunities, right? That cash flow that they desperately need. So you use a bond out there, which, makes you increase the cost a little bit, but it, basically eliminates, if not massively mitigates, any sort of risk that that thing's not going to be done on time. You're not going to have clients that can't get into the building when they need it, those types of things. That's the great tool that it is. It's to guarantee that, everything else that you're doing gets done on time and that you don't have liens and litigation and all that stuff.
Okay, how's it different than insurance?
Oh yeah, that's a fantastic question, one we get all the time. So insurance is a risk pooling product, right? Which is, hey, 100 people sign up. We don't know who's going to have a fire, but somebody's going to have a fire and, have a loss. Bonds are completely differently. They're written on what we call a no risk basis. They don't assume losses, so it's not risk sharing. Instead, it's more of a guarantee. But unlike a traditional guarantee, which is at the end of the project and at the end of litigation, this is at the front. So if, the company doesn't, fulfill its terms, the obligee can go directly to the surety and say, get somebody else to finish this. We need it done on time. And that's why it's so powerful, is it skips that, litigation step, that delay step.
You know what the worst thing to do is when you're selling a business? Paying huge capital gains taxes. In fact, they're about 20 to 50% of the sale. And if your client is selling, whether you're a business broker, M&A advisor, financial advisor, they have a large capital gains tax problem. And guess what? We have a solution. We build capital gains tax solutions for sellers of highly appreciated assets, including real estate, including businesses and other assets. And we want to encourage you to take action today to learn about what solutions are available. So think about a business, think about real estate, think about other assets that have at least $1 million net proceeds and $1 million gain, and the sale is going to result in 20 to 50% in tax. So what can you do? Well, you can build a capital gains tax solution with our team. Go to capitalgainstaxsolutions.com or click on the link below to get started.
Step.
Okay. All right. So what's the number one secret, I guess, to making investments, making returns on your return on investment with bonds as a accredited investor, or someone who maybe is more into real estate or business investing or traditional stocks and insurance stuff? Walk us through, the best arguments to become an investor in bonds.
Yeah, so unlike a financial bond, it's not a direct investment, right? So what it is it's a tool to use to protect all of your other investments. So if you're a commercial real estate developer or owner, right? The reason that if you're doing some sort of construction on your project or building out your buildings, those types of things, then you get the bonds to guarantee that your project actually gets done on time.
Got it.
See, what you want to do is you want to build that into your model, right? And then what it does is it guarantees that your cash flow works. Now,
Okay.
7 years ago, this didn't matter as much, right? Because interest rates were at zero. So being delayed by 2 months cost you very little. Now with interest rates at a more, historical norm, those delays, that carry cost goes up and up and up and up, right? And so you don't want that. That's a huge tail risk. So you use bonds to basically eliminate that tail risk.
Okay. Can you do this? You said it for construction, that makes sense. But what if you're buying like an apartment complex and doing, development, value add development, and or just the, hey, I think interest rates are going to be, back up 2021. I think interest rates are going to be higher in 2025, right? And I want to buy a bond, even though I'm buying this apartment complex with a 3-year, fix, but it's going to float after 3 years. Could I have bought a bond to extend that ability to have lower rates?
Yeah, so a bond's not going to directly protect you on a lower rate basis,
Right.
right? But lots of developers use bonds again to make sure that their stuff gets done and their development gets done. And to be fair, there are developer bonds called subdivision bonds or site improvement bonds that are required. So you use that. You also want to make sure that all of your, people that you work with are bonded because they've already gone through this massive underwriting so that your risk level goes way down. You can't this is where bonds are funky, right? Because most people think of bonds as a financial instrument. Surety bonds are not a financial instrument directly, right?
Got it.
And so people keep trying to, put them into those little holes. They don't work
Got it.
quite like that because they're a little bit more complicated. What you do is you use it to basically eliminate any of your risk on your other financial products, or
Okay.
at least mitigate that down to zero.
All right, we're speaking with Gary Eastman. Everybody, you can learn more about it. Go to swiftbonds.com. Surety bonds, performance bonds, they're performance bonds experts. Interesting. So Give us a couple case studies to bring this to life for someone who might be listening who owns a manufacturing business or owns I don't know if it's a tech business, or I guess construction is probably the easiest one, but maybe anything else like for case studies for someone this might be valuable for.
Okay. Let's start with your basics of any sort of manufacturer, whether it is, let's just start with manufacturer for anything, right?
Mhm.
You're going to build this brand new manufacturing plant. What you do is you go out and you get that bonded because you have, let's say, an 18-month window to build that plant, right? Get everything done. You make sure everybody's bonded. And so what happens is it basically guarantees that at the end of that 18 months, your plant is up and running.
Okay, what if it's 22 months? What happens?
Okay. Yeah, so there's a couple things that happens. One, there are damages, right? So your surety is paying you money. Or number two, what happens is when you get close to that 18 months, if your contractors aren't bonded, um, or are bonded and they're not getting it done, the surety will go out and get a replacement contractor to go out and finish that project because they want to pay as little in damages as possible, right? Because there are typically liquidated damages clauses, so people are paying $1,000 a day to as penalties to not get it done on time. What happens in reality is because nobody wants to pay that $1,000 a day, this is priority number one. So everybody is just rushing and rushing and rushing to get it done on time. They'll push other projects off to get their bonded stuff done on time. And that, of course, for any sort of manufacturer, that's the key, right? What you want the product out the door. Works for every other industry as well. That's why people do bonds.
Got it. Okay, got it. I think it's making more sense as I think through this. I'm definitely newer to this. What other industries that come to life here that could help people understand what you do and who you can help?
Yeah, so there are really three buckets of bonds. Construction, what I was talking about. A lot of companies just need bonds for their licenses, right? So like there's crypto licenses, there's cannabis licenses, there's hunting and fishing licenses. So you have to get bonds if you're selling any of that stuff. Same thing, alcohols, gas, all, there's 25 different thousand types of bonds. There's also court bonds. So what happens is people run into bonds a lot. You just think of it as a piece of paper. I always tell people it is a piece of paper, but more importantly, use it as a tool to find those industries out there because what happens is, when it comes to bonded work, there are fewer players. And what that means is that there are higher margins. And so by getting into bonded work, yes, it's a bit of a pain, right? Yes, there's a bit of a paperwork headache, but more importantly, your margins are higher. And so we see that people that start bonded work tend to never go back because they like having those higher margins. Because quite frankly, there are just fewer competitors.
Okay, that makes sense. Okay, excellent. Again, speaking with Gary Eastman, everybody can learn more by going to swiftbonds.com, swiftbonds.com. Need a license permit, a Surety bond searched by the state. He has it all here. Get a quote. And licensed bonds in all 50 states. So what haven't I asked you so far that you want to make sure you share?
Yeah, I think for most people, the thing that I really like to share for people that are looking at businesses and looking at ideas is that you want to use the tools that are available to you, right? So run the numbers, make sure things are out there. When you see roadblocks, and surety bonds for most people are a roadblock or a headache or a problem, that's a great thing because what happens is many other people just walk away from that. They're like, I don't want to deal with that. That's a problem. I want something that's easier. I tell people this is the greatest thing in the world. Roadblocks are amazing because it drives competition away. It raises margins. Once you're able to get past that hurdle, you're in, I'm not going to call it a blue ocean, but there's a blue ocean with fewer ships for sure.
Yeah, it sounds like roadblocks are great because they can create that moat around whatever you're trying to accomplish. And once you get past that moat, then you can perhaps charge more and make more money and solve a bigger problem. Very cool. Gary, you ready for the lightning round?
Fire away.
All right, knowing what you know now, if you can go back to your 20-year-old self, what's the one golden nugget makes you tell yourself to do?
The biggest golden nugget would have been to start sooner. Just start, right? Don't wait on everything being perfect. Don't wait on being older. Don't wait on gaining more knowledge. Just start, and you're going to figure out a lot of things along the way. You weren't going to know them anyway, so just get it done sooner rather than later.
Excellent. Number one book, gifted or read in the last year?
Best book I've read in the last year is a book called The Richest Man Who Ever Lived, which is basically a redo of the book of Proverbs in the Bible, which is, he reorganized it and basically says, hey, here's a lot of really great wisdom that's set in the book of Proverbs.
Excellent. What are you most curious about?
I am most curious right now about how interest rates are working, along with geopolitical risks, along with AI, along with just the changing world that we live in. Everything's changing just from a demographics, geopolitical, all this stuff is changing all at the same time. Probably the biggest change we're going to see in our lifetime, how that's all interplaying together.
No, I couldn't agree with you more. It's massive. The rapid of change and just the stakes of the state of the impact of change. What is your number one leadership quote or theme that you strive to live by?
So it's not a buzzword to us. We believe in integrity, right? For most people, I hear it as a buzzword. We don't believe that. We say, hey, look, we want to strive in everything that we do to have integrity, be open, be honest. We'll never go past that, even if it costs us, and it has cost us before dearly. We'll continue to do that.
Excellent. Next question. Number one way you're using AI?
We use it in three ways. We use it on the intake side, right? We use it on the client acquisition side, and then we use it on the processing side. So we are starting to implement AI all over the place. We believe that the AI is more of a tool than a single push button right now. Fast forward 15 years, maybe we'll get to the push button. But right now, we use it as a tool in different ways to help us be more efficient and, quite frankly, just provide better service to our clients.
Excellent. Gary, for our listeners who want to get in touch with you, what's the best place for them to find you?
Yeah, you can always find us on our website, swiftbonds.com. Email me at gary@swiftbonds.com. We also have all of the normal socials, Twitter, Facebook, and YouTube.
Awesome. Gary Eastman, thanks for being on the show. I also want to thank all of our listeners for listening to another episode of the Build Business Podcast. We're also streaming on Capital Gains Tax Solutions Podcast and YouTube channels. And we're on this journey with you to scale from millions to billions. So we give more all of it away to help MVPs, the most vulnerable people. My name is Brett Swartz. And if you have a large exit coming up too, for the sale of Bitcoin, business, real estate, and looking for an alternative to a 1031 exchange, you can go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com, or we can help you with your big exit. And of course, if you have a bond need, make sure you reach out to Gary and his teams, swiftbonds.com. Get a quote, and make sure that you are working with the best. And Gary's been in it a long time and appears to be the best at what he does. So make sure you go to swiftbonds.com. Appreciate everyone listening and watching, and we'll talk to you again all real soon. Bye now.